Hello, this is Dr. Christy Patton-Lukes, a chemical engineering professor at Missouri S&T. In this lesson, we'll be looking at how we can compute taxes, cash flow, and profit for our engineering economic analyses. The key thing is that we're going to be wanting to make approximations, okay? Very important. This is for approximations to our taxes, cash flow, and annual profits. And we're going to do this assuming there's a constant percentage tax rate T. Now, our expenses are going to be the cost of manufacturing without depreciation plus the depreciation for the year. Now, the reason we're going to do it this way is because remember the amount of depreciation will change each year. The income tax can be approximated as the revenue minus the cost of manufacturing without depreciation minus the depreciation all times the tax rate, okay? So you're taxed on the revenue, but you get to deduct the manufacturing costs and depreciation each year. So this reduces your tax liability. Now remember, this is all for an approximation. Now your after-tax profit, well, you're going to take this revenue minus your cost of manufacturing, because that wasn't profit, okay, minus the depreciation times 1 minus T, and that's called a net profit, although really you didn't get to get any value from that depreciation other than lowering your taxes. So your actual after-tax cash flow is this after-tax profit, so R minus cost of manufacturing without depreciation minus your depreciation times 1 minus T plus the depreciation, because really you didn't pay that money out. So your tax cash flow, you bring back the depreciation. And there may be, parenthetically, other cash flows that happened. Maybe you got a tax refund from the year or something like that. So there's a possibility that there might be some other cash things that happened other than just simply revenue and manufacturing costs. Now, these other cash flows might be like the very last year, the working capital return. Or remember, our last year we're going to get a salvage value perhaps. So there's any number of things that might fall into this category. If you want to do an actual tax calculation in the U.S., you need to look at the IRS rules. Now, this is the 2017. I kind of recommend that what you look at would be like your own personal taxes and actually really analyze how those taxes were calculated. It's going to be fairly similar for business taxes. But when you read this, okay, students seem to not understand that this is written for what, a 5th grade reading level, I believe is what they say the IRS tax code is supposed to be written in. But that means that engineers get this totally wrong. So when it says of the amount over, what that means is we're going to take the amount, so our taxable income, we're going to subtract off this $50,000. We're going to multiply that by, in this case, 25%. And then we're going to add to that $7,500. So for instance here, it would be the taxable income minus 15 million times 38% plus $5,150,000. Okay, and this would be the way you figured out your taxes. This is for doing actual taxes. So as you're reading a problem statement, be very careful whether you're trying to predict tax estimates for the future, or are you trying to calculate a current tax statement? Okay. You also, though, are going to need to realize there will be state and local taxes. Since we're in Missouri, there's a flat 6.25% corporate tax rate was what was happening in 2017. And so, just kind of see if you can look up the codes for a taxable income of $350,000. Now, if you're a corporation, you fall into this category, which means you'd subtract $335,000, leaving you with $15,000 at 34%, plus $114,000 of taxes. So let's look at an example where we're going to do an estimate, okay? So let's replace this word with estimate the after-tax net profit and the after-tax cash flow. So our income tax for this problem is going to be, well, it's going to be my revenue, $750,000, minus my manufacturing costs, minus my depreciation for that year, and I'm going to multiply that by my tax rate. Now, the federal tax rate is 0.296, but I also have state or local taxes. In this case, I have state taxes to worry about. So my total tax rate is going to be more like 35%. 36%, I guess, would be closer. So $340,000 times 0.359, meaning that the tax that I can estimate that I will owe is $122,060. My after-tax profit is going to be this 750 minus 300 minus 110, so 340,000 minus my tax, which is 217,940. Now, to the IRS, that is your profit for the year. But that's not really your profit, okay? This is, just what the IRS thinks of your profit. The actual after-tax cash flow is going to be this $217,940 plus the depreciation. No money changed hands with that. So therefore, your actual profit is $328,000. The IRS net profit is going to be $218,000. The one that you really care about is this, okay? So this probably might take a little more practice than some of the other things that we've looked at. But this does conclude Chapter 9. In the next series of lessons, we're going to be looking at how we can pull all of this together to make decisions about whether or not we should actually go ahead with various engineering projects. Thank you very much.